You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 28th day of June, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We actually do 2 live broadcasts every trading day. The first live broadcast, that's our live training room, from 9:30 a.m. to 11:30 a.m. Eastern, every trading day. Now, that particular broadcast hang on one second. That particular broadcast is reserved for members only. Members and trial members only. If you've not yet taken your free trial, you can do so right now. Go to mytradingiq.com, and at the very top of the page, there's a button that says 5-day free trial. Now, you don't have to worry about waiting till Sunday night or Monday morning to make sure you get your 5 full days with access to every resource our lifetime members have access to. You can sign up for the trial any day of the week or weekend, any hour of the day, and you'll still get 5 trading days, not only in the live training room, but with unfettered access to every resource that our lifetime members have access to. Again, there's no credit card required. We invest our time, our energy, and our resources in you so that you, without having to spend a dime, can show up, learn, and at the end of the 5 days, make a well-informed and intelligent decision as to whether or not trading is right for you. It's not a pay now, play later. It's a learn now, pay later. If you show up every day, if you make sure you utilize all of the resources that we put at your disposal, if you connect to the group in Telegram so that you can converse with our many traders who have learned the exact same strategy, how to use the exact same indicators, and some after many, many years of losing thousands, even hundreds of thousands of dollars, have actually turned the corner and are now enjoying a green P&L on a consistent basis. You get all of that at our expense. At the end of your 5 days, then we'll talk and see if you have what it takes to consider trading for a living. Not everybody's cut out to be a trader. Okay? Just because I want to fly an airplane, I probably never will. Okay? I don't have the time or even the energy at this point to go through flight school or whatever else. I'll probably never become a brain surgeon, not that I even want to. As a kid, I wanted to be a cop, but my life took a different direction. Joined the military at an early age. I could go on. So, now, I did a talk a week ago or 2 weeks ago. You can find it on our YouTube channel. Can anyone learn how to trade? If you missed that, and if you're wondering, after all the years and all the money you've spent, if you're still left wondering, can you actually learn how to trade? I suggest you go to the YouTube channel and scroll back, find that daily episode, and listen. The answer might surprise you. Now, every day when the live trading room ends, we take a 30-minute break and come back at 12 noon Eastern for the afternoon broadcast. That's this broadcast. This broadcast, unlike the morning broadcast, is open to the public. Everybody everywhere on planet Earth with an internet connected device is invited to join us, and we hope you will. While you're there on our YouTube channel, be sure to hit the subscribe button and the little bell so that you're notified anytime that we go live. Now, this afternoon broadcast, there's two different ways to join. The best way, go to mytradingiq.com, scroll down to where it says afternoon broadcast, click the link, complete the 30-second registration form, and you're done. Every trading day going forward, you'll get an email about an hour before this broadcast starts. At 12 noon Eastern, all you have to do is click the link in the email you received, and it will automatically log you into our platform. Now, I call that the better way because it gives you access to the question box so that you can ask questions and be a part of the discussion. Now, there's going to be days where you're out of the office, away from the desktop, but you'd still like to join the afternoon broadcast live. And there'll also be days when you're just busy and can't join live. So we have one solution for both situations. It would be the YouTube channel that I mentioned a few moments ago. And it's pretty easy to remember because you already know the youtube.com part. Just remember CFRN. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,200 daily episodes archived for your educational and viewing pleasure. If you are new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week. You can scroll back a month, 6 months, a year, 2 years, even more. Pick a day at random. You don't even have to listen to the whole broadcast. Just fast forward to the part where I'm doing the recap of the alerts, and fast forward to the part where Michael's doing the recap of the live training room. You'll quickly see the thread of connectivity, the thread of continuity that's woven through each and every daily broadcast. youtube.com Now, here's how it goes. If you're new, if you're a first-time visitor, we're going to open with our daily devotional and a word of prayer. Then we're going to take a look at the numbers from around the world, so we have a global perspective on the financial markets. Then I'm going to start the recap with the daily chart and then work down to the 30-minute chart, where the logic alerts and the concierge trade alerts are created from. Now at 12:45, so if you're tuned in live at 12:45 Eastern, or if you're watching this after the fact, 45 minutes into the broadcast, give or take, Michael will join us and give us a recap of what happened today in the live training room. Then at the top of the hour, we'll go live on the TradingView platform and do some live trading for 30 minutes, just like we do for 2 hours every trading day in the live training room. So that gives you a little taste of what to expect when you decide to take the trial. Once we're done trading on the TradingView platform, I will announce our tweet of the day, and then I will complete the recap of all the alerts that went out last night. So let's get rolling, and let's open with that word of prayer. Start with our devotion. Today's scripture is Matthew 12:42. It's chapter 12, verse 42, and I'm sharing from the Message translation. Our topic this week is wisdom. On Judgment Day, the Ninevites will stand up and give evidence that will condemn this generation, because when Jonah preached to them, they changed their lives. A far greater preacher than Jonah is here, and you squabble about proofs. On Judgment Day, the Queen of Sheba will come forward and bring evidence that will condemn this generation, because she traveled from a far corner of the earth to listen to wise Solomon. Wisdom far greater than Solomon's is right in front of you, and yet you quibble over evidence. Now, Matthew is talking about Jesus, of course. So the call for wisdom, actually in Revelation 13:18, talks about that. Wisdom is required more often than we realize. Wisdom cuts through emotion and gets to the reality of the situation. What is the wise thing to do? That's an effective question for decision making. What is best for the enterprise is a wise question to ask if it relates to business or ministry. Many times, God speaks through money or the lack thereof. So if money is tight, then we need to be extremely wise with expenditures. Wisdom says, cut back on expenses and do not add additional costs. At this point, it is not about a lack of faith It is about being a wise steward with what you have so that you can be trusted with more. In the parable of the talents, the one who multiplied the talents given to him according to his ability, doubled it, and he was given more. The second fellow doubled his master's money and was given more. But that third guy, the one that hid it under a rock because he knew his master was a hard man, well, what he had was taken from him and given to the one who had the most. And if you care to read all that, then there was wailing and gnashing of teeth. Let's try to stay on a positive note. The wise are not patient or desperate. Wisdom takes a step back and thoroughly evaluates a situation before charging ahead. So, do you solicit wisdom on a consistent basis? Knowledge and experience mixed with common sense and discernment is a great recipe for wisdom. Wisdom is seeking to understand God's perspective on matters, whatever they are. This is why the wisdom found in God's Word is so relevant for living even today. The Bible is a treasure trove of wisdom waiting to be discovered by the wise wisdom hunter. Therefore, don't just pray, read and meditate on the Bible, but also seek out the wise, as it tells us in Matthew 12:42. Look for people with gray in their hair, people who exhibit wise behavior. The wise will help you validate the inklings of wisdom you are beginning to grasp from your study of Scripture. Read books and listen to messages of wise men and women. If you hang out long enough with wisdom, it will eventually rub off on you. Take every opportunity to call on wisdom. Be wise in your relationships. Be wise with your money and your time. Before you realize it, your wisdom will attract others who are hungry for the same. Moreover, the crown jewel of wisdom's accumulation is the fear of the Lord. Now, if you translate that word fear, it means respect and reverence. Proverbs 1:7 says, "The fear of the Lord is the beginning of knowledge, but fools despise wisdom and discipline." The fear of God positions you to receive wisdom. Having no fear of God means you lack wisdom. No wonder our world is filled with fools. We have lost our fear of God as a people, and wisdom has eluded us. Fear of the Lord is an incubator for wisdom, and God dispenses wisdom to those who respect Him. Love God, but fear Him. Worship God, but fear Him. Learn of God, but fear Him. Serve God, but fear Him. Your fear of God qualifies you for wisdom. Don't become so familiar with God that you lose your fear of God. This is unwise and leads to foolishness. Wisdom awaits your harvest call. Pluck it and enjoy, like plump, luscious fruit on a hot summer day. Taste and see that wisdom is good. No one has ever complained of attaining too much wisdom. Call on wisdom often, seek out the wise, and ask them and God for wisdom. For this is the wise thing to do. Join me in a word of prayer. Heavenly Father, we approach your presence today with humble hearts, grateful for the revelation of your truth found in your word. As we contemplate the words spoken by Jesus in Matthew 12:42, Queen of the South will rise at the judgment with this generation and condemn it. For she came from the ends of the earth to listen to Solomon's wisdom, and now something greater than Solomon is here. We are reminded of the surpassing greatness of Jesus Christ and the call to seek him with all our hearts. Lord, we acknowledge Jesus as the fulfillment of all wisdom, the one who surpasses even the renowned wisdom of Solomon. We thank you for the gift of your Son, who came to reveal your truth and demonstrate your love to the world. Confess, God, that at times we're so easily distracted by the things of this world and fail to seek after the wisdom, the true wisdom that comes from you. Forgive us, Lord, for the times when we have not prioritized our relationship with you and instead have pursued worldly knowledge and pleasures above seeking the treasures of your kingdom. Today, we pray for a renewed hunger and thirst for your wisdom, which is found in Jesus. Open our eyes to the depths of his teachings, that we may understand and apply them in our daily lives. Give us hearts that are attentive and receptive to the guidance of your Holy Spirit, leads us into all truth. And Lord, may our lives reflect the wisdom of Christ to a world that is desperate for answers and direction. Help us to be a light that points others to the truth found in your word. Grant us opportunities to share the wisdom of Jesus with those around us, that they may also come to know him as their Savior and Lord. In the midst of a world that seeks after fleeting wisdom and empty knowledge, anchor us in the eternal truth of your word. May we all grow in wisdom and understanding, aligning our thoughts and actions with your perfect will. Thank you, Lord, for the gift of wisdom through your Son Jesus. Treasure and honor him above all else, living in a manner that brings glory to your name. And it's in Jesus' name that we believe and pray. And everybody said, amen. Well, happy Wednesday. I hope it is a happy Wednesday for you, wherever you are, wherever you are. Let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. The Dow is down 26 points. NASDAQ up 72 points. S&P 500 up 7 points. The Russell 2000 up 5.5. In the commodity basket, crude oil up $1.39, trading 69.09 last. That's a gain of a little over 2%. Gold down $4.40, trading 19.19 last. Silver down 11 cents, trading 22.85 last. In the Asian markets at the close, the Nikkei gained 655 points. That's a gain of just over 2%. The Shanghai remained unchanged. The Hang Seng gained 23 points. And in the European markets at the close, FTSE up 39, the DAX up 102, the CAC up 70. And for the CAC, that's a gain of almost 1%. So we had, since the Shanghai is unchanged, we'll just call it a green day in Asia. It was definitely a green day for the UK. But at the moment, it's a mixed Radio Wednesday here in the US of A. We have the Dow in the red, not a lot, just 32 points, which is not a lot for the Dow. The NASDAQ, the S&P, and the Russell solidly in the green. Now, for those of you that are tuned in, hang on a second. All right, for those of you tuned in via the YouTube channel, you already know the title of today's broadcast. Will artificial intelligence destroy the markets? It's a hot topic these days. As AI continues to revolutionize various industries, concerns have emerged regarding its potential to impact the financial markets. Speculations about AI-driven algorithms taking over and destroying traditional trading practices have circulated. However, a closer examination reveals that AI will not obliterate the markets, but rather enhance and transform them. So we're going to talk about a couple of the reasons why the integration of AI into the financial markets is a synergistic partnership rather than a destructive force. Number one, AI in its current form lacks the ability to replicate human intuition, creativity, and adaptability. While AI algorithms excel at processing vast amounts of data and identifying patterns, they lack the depth of understanding and contextual reasoning that human traders possess. Markets are influenced by a myriad of factors, including geopolitical events, market sentiment, and unforeseen occurrences, which require human judgment and interpretation. Human traders bring unique perspectives critical thinking, and the ability to adapt to changing conditions, enabling them to make nuanced decisions that AI alone cannot replicate. Number 2, AI algorithms heavily rely on historical data to identify patterns and make predictions. However, financial markets are dynamic and subject to evolving conditions, making it challenging to capture all relevant data accurately. Moreover, financial markets can experience unprecedented events or paradigm shifts that deviate from historical patterns. Human traders have the ability to adapt their strategies and make intuitive judgments in response to novel situations. They possess the capacity to think beyond predefined models and incorporate qualitative factors that AI algorithms may overlook. Number 3, financial markets are inherently influenced by human emotions, sentiments, and behavioral biases. Fear, greed, and irrational exuberance can drive market movements. AI algorithms, by design, lack emotions and cannot fully comprehend human behavior. The ability of human traders to assess market sentiment, interpret news, and gauge investor psychology is a valuable asset in understanding market dynamics. Emotions play a vital role in decision making, and human traders can exercise rational judgment while considering both objective and subjective factors. Number 4, the integration of AI into financial markets is subject to regulatory oversight and risk management measures. Regulatory bodies ensure that algorithms and AI systems adhere to established rules, guidelines, and ethical standards. Risk management protocols and circuit breakers are implemented to mitigate potential risks associated with algorithmic trading. Human involvement and supervision are crucial for ensuring compliance, addressing unforeseen circumstances, and mitigating systemic risk. The human element acts as a safeguard to prevent unchecked algorithmic behavior that could disrupt market stability. And last, the future lies in embracing the collaboration between AI and human traders. AI algorithms can assist traders in processing vast amounts of data, identifying patterns, and generating insights. Traders can leverage AI-driven tools for enhanced decision-making, risk assessment, and strategy development. The synergy between human judgment and AI-driven analytics can yield powerful results. By harnessing AI as a tool, traders can augment their capabilities, optimize performance, and gain a competitive edge in the markets. The bottom line, artificial intelligence is a transformative force in financial markets, but it will not destroy the markets as some fears suggest. The unique abilities the unique qualities possessed by human traders, such as intuition, adaptability, emotional intelligence, cannot be replicated by AI algorithms alone. The limitations of data, the complexities of market dynamics, and the importance of regulation and risk management underscore the need for human involvement. The future of financial markets lies in the collaboration and synergy between AI and human traders, where the strengths of each are leveraged for improved decision-making and market performance. Embracing this partnership paved the way for innovation, efficiency, and sustained market stability. So put your fears at rest. If you've become a consistently profitable trader, your job's not going to be taken away by a machine or an algorithm. With that, let's move on to where we start, at the daily chart. This is the S&P 500 E-mini futures. Now, this Friday will make 2 weeks since we put in this high. Markets were in a downtrend for over a year, and the bottom was put in October 13th of last year. So these fibs that you see on my chart go from the October 13th low of last year to the most recent swing high put in on June 16th. Now, this was a Friday. This was the Juneteenth holiday. So on the Tuesday broadcast, we discussed the fact that the step line, that's the black line, had crossed from the left side to the right side of blue and climbing. When that happens, whether it's on a daily chart or a 30-minute chart, whether it's on the S&P or crude or gold, Walmart, Amazon, Bitcoin, British pound, spider, doesn't matter. When the step line crosses blue and climbing, it's an indication that price is going to attempt to pull back to the BBC. That's the green line, okay? Stands for bull, bear, cross. When price crosses below the green line, we anticipate lower prices, whether we're on a daily chart or a 30-minute chart. When price gets above the BBC green line, we anticipate higher prices. Lower prices, higher prices. Now, we spoke a lot over the past week and a half about price always reverts to the mean. And the pullback to the BBC holds more often than it doesn't. It held here, and here, and here, and here, and all these back here. And now what did it just do? It held again. When we discussed the fact that price would most likely pull back to the BBC, we knew that there were obstacles in our path. There was the 50% fib extension. As you can see, when price came down to it, gave it a nice bounce. The following day, price straddled the 50% fib extension. Following day, and even the following day, the 50% fib extension became resistance. And that ultimately drove us down to the 38% fib extension and the daily BBC. Now that price, we expected support. If you go back and listen to any one of these daily broadcasts, youtube.com/CFRN, you'll hear me say again and again, once price hits 38 in the BBC, we expect a bounce. And what do we get? A very nice bounce. I'm down here at around 43.70 up to 44.27. Okay. Now the 50% fib extension is at 44.20. We've got basically a doji on the day. Yesterday we overcame the step line, but where did we find resistance? At the 50% fib extension. Coming down, it was support, then it became resistance, then it became resistance, and again resistance. Overhead is red and falling. This indicator is called the CFMA1. I refer to it as blue and climbing, red and falling. Price is above the BBC and you have blue and climbing. This is what I call a perfect stack, whether it's on a daily chart or a 30-minute chart. Price, step line, blue and climbing. Okay? And on a short, the opposite. So we know that this represents resistance. We also know that this 50% fib extension represents potential resistance. So if buyers are committed, they may drive price up a little bit higher. We might even spike red and falling. I mean, you have to embrace all possibilities. Buyers could, and I'm talking institutional buyers. That's why we're looking at the daily chart first, before we get into the 30-minute charts. See, institutional traders look at daily, weekly, and monthly charts the way you and I get 30-minute charts, 5-minute charts, tick charts, and range charts. It has to do with account size. Institutions typically have balances in the hundreds of millions, billions of dollars, and even in BlackRock's case, 10.5 trillion under management. So when those institutional traders place a trade, that moves price. When we retail traders place a trade, we're not the reason price moves. So the reason I encourage everyone, no matter what market you trade, look at the daily chart 2 minutes before you start trading. It will give you insight into what the institutional traders are doing. It will help you identify where important support and resistance are. And when you drop down to your smaller time frame to actually begin putting on and taking off trades, you'll have some very valuable information. Right now, red and falling's at 44.34. The 50% fib extension's at 44.20. The step line, now that we've gotten above it, the step line is actually acting as support. Okay, 44.02, that's an important number. And then the 38% fib, 43.71, 43, and we've got the daily BBC, it looks like at 43.73. You should jot all those numbers down, again, no matter what market you trade. Whether it's a futures market, an individual stock, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. So we got the bounce we expect. Well, first we got the pullback we expected, and then we got the bounce we expected. So where we close today will be very important. If we close above the 50% fib extension, that's going to put us right up against red and falling. And if buyers are committed enough to take us through red and falling with a green candle, well, that'll be something to see. But again, you got to embrace all possibilities. Now, the path of least resistance appears to be a move below the low of the day at 43.99 and a quarter down to 43.73. Doesn't mean the market can't go higher. I'm just telling you what I feel is the next high probability move. This area right here. If price were to overcome red and falling, and not just overcome it, but continue moving higher, then that would generate a window of opportunity up in this area. Okay? But for now, we're going to leave it like this. Now, Valerie just sent me over the CTAs. So let me grab those real quick, and thank you very much, Valerie. Appreciate that. Let me just copy it. And I've got to paste it into my channel. And because we have different screen resolutions, got to format it properly so it'll display properly for you. Go. Okay. Logic 247 is our 24/7 around the clock E-mini alert service. Michael, are you here? Michael should be here by now. All right.
I'm here.
Oh, you are here. All right,
I'm
guys,
here.
we'll pick up with this recap. As you can see, we've dropped below 20%. Rough start to the week. We were, goodness, up.
You were killing. You were at 89. Last time, 91.
I'm sorry.
I said the last I looked, you were at 89% when I looked yesterday. I think
89% stomp down.
no, 89% full target or partial target.
Right. Yeah.
Something like that.
Yeah, 93, right up here.
Right, 93.
Yeah.
Okay.
So that's changed to 88. So I'll go over all this with you guys right now. Michael needs to give us a recap of what happened in the live training room. Then we're going to go live on the TradingView platform for 30 minutes. And then I'll be back after we trade on the TradingView platform, give you the tweet of the day, and then we'll recap each and every one of those markets. Take it away.
Okay. Here we go. I accidentally just shut off my slingshot on all of these. All right, I'm trying to bring it back up. Okay. There we go. All right. So, jump in right here now. Good afternoon, everyone. Today is Wednesday, the 28th day of June, 2023. Now, if you have not taken a free trial with us and you want to, just click on this right here. It says sign up for your free 5-day training now, 9:30 to 11:30. Click on that. When you click that, you'll be sent all the information you need to get into the room in the morning and to sign up for your platform, all right, to get your platform going. Now, you should go here to Trading Platforms and give us all the information we need to set up your desktop for you. You should really get your desktop set up if you can bother taking the trial. Get in there and get that desktop set up, all right? If you haven't done that, or if you have any trouble with it at all, get in touch with us. All right, you can email us at support@cfrn.net or support@mytradingiq.com. Email us and say, I need a quick meeting to set up my desktop, and we will do it for you. All right, do not let that be a stumbling block. If you are having any trouble with that at all, it will take us 5 minutes to set it up. Just ask. All right, we're here to help. All right, spreadsheet. So we had a pretty good day today. Again, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. But today is the 28th day of June 2023. We had 130 ticks on the NQ, 6 ticks on the Russell, 16 ticks on the gold, and 8 ticks on the ES. Put us at 940 per unit this morning. Today it took 7 minutes and 2 trades to get to the goal. At that point, up $1,140, and today we took 18 trades. So on the month now, we're at $7,862. We have 2 business days left to the month. So where does that stand on the year? Right, so it's not that bad. It's not great like March was, but it's by the end of the, we have 2 more days in here, so we'll be pretty much par around 8,000, 8,500, 9,000. Seems to be sort of our average so far, given that we're only trading for 1 hour, roughly 1 hour each morning. I mean, we're not even trading for 1 hour. If we had 20, what do we have today? 18 trades. Let's say each trade lasts about, we'll say on average, each trade lasts 2 minutes. So we're only trading for half an hour. And the rest of the time we're talking and waiting for trades. Anyway, on the year, on the month, we're at $7,862, averaging $413 per contract per 2-hour trading day. We've gotten our goal in 119 out of 122 days so far this year, putting us at $57,669, averaging $472 on the year per trading day, right? Per trading session in the morning, which is usually about an hour. If you were to quit trading when you get your goal for the day, and you were to add 1 contract per month, you have to earn your way up to that 1 contract extra per month. So this month we had to make $12,000 quitting when we get our goal for the day, and we're at 16 now. So Monday we'll be trading 7 contracts. Anyway, you would only had to work just about 37 hours so far this year, and you would have averaged $1,670 for those 37 hours. All right, let's get into the trades. Gold. Today on gold, we only had a couple of trades. Most of our trades were on the NQ today. So we'll be able to go through these pretty quick. And it's good because we only have 7 minutes. In the gold, I believe this is the whole thing. You can do the whole day in one screenshot like this. You didn't have a lot of action. Our first trade in gold was right here, and we picked up 4 ticks on that one. And our second trade was right here. We picked up 12 on that one. Right, that put us at plus 16. There's a whole bunch of nothing all through here. You get all the way over here. This was it was right before the break, actually. There was a pullback here. Had long-term direction. It didn't hit the ribbon, which is what I was waiting for, so I didn't take that. And this was during the break. I would have taken this one had I been there, and I probably would have gotten a break even on it. There's been nothing since on the gold. Okay. Yeah. I don't know how things do that. Anyway, on the Russell now. We didn't have all that many trades on the Russell either, just a couple. And there's one of them. And there's the other one. 3 of them. Okay. All right. Well, you can see the Russell was giving some trades in here. The green arrows in here, they were giving out opportunities in here, but they weren't really doing very well. That would have been a break even. And then we would need a lower swing to take that, which we didn't get. Then right here, I don't know if I would have taken that right in here. I mean, I know I didn't, but right over here, we did have the lower swing. That would have stopped you out. I didn't take that, but I did take this one, and I got a break even on it. And then it finally started to give us some sort of trend in here. I missed that one, and that one, and that one, and that one. And I grabbed this one for another break even. Then it started to go sideways again. Gave 1 short trade in here that I would not have done. I got to check the settings on this Russell here because it really should not have given us any arrow in here. I'm going to increase the sensitivity on it, I think. And it gave some more trade opportunities in here, but we didn't take any of those. They all would have done okay, it looks like. This is the final one that we took right here. This was just off the ribbon. We didn't get an arrow because it wasn't coming out of the overbought or sold in there. And on that one, we picked up 6 ticks. All right, put in a lower swing and gave another one. Oh, wait, this isn't the one we did. This is the one we did. We got 6 ticks on that, and it didn't put in a lower swing, so we didn't get anything through there. Then it started moving up and gave us nothing. Went sideways, nothing, and this is all during the break. Gave some nice shorting opportunities in here. Only this one could have been taken. If you didn't take that one, you could have taken that one, but if you didn't take that one, you need to get the lower swing to take this one. Okay, and then you could have taken this one. There's an active one right now on the Russell. Let me see if I can find my Russell Dom and put that trade on. Click through all this, and I have no idea where my Russell Dom is. It's not where it's supposed to be, and it's too late to get into it now anyway. Here it is. All right, it's too late to get into it now, but let's see if we can figure out where it's going to go. 63.80 is where that's going to go to. Okay, 63.80. I'll draw it in for you. 63.8. Now the swing low is just a little bit lower than that. So that's where it's trying to get down to right now. Okay, and it's in the pullback phase right now. On the pullback, 65.8 is what it's trying to pull up to. It's 65.8, and that is going to be right up here at the top of the ribbon. Okay, so you're in a little bit of junk right here. The place to trade it would have been from right here at 65.1, and it did drop down to 64.2 for 9 ticks in profit. But that is the Russell today. The ES, we had on the ES just one trade, and we have 8 ticks on it. That was right here. Picked up 8 ticks on this one trade on the ES. And that's pretty much it. This is the whole day in the ES right here. We took this one trade, we got 8 ticks, and we didn't trade it again. During the break, it had some opportunities in here. It's pulling back, about to give another opportunity right now. Okay, let me get over here and make sure that I have this selected. I do. Okay. Because we have 2.5 minutes to get into the live stream, and the NQ is where the majority of the trades were today. So we'll go back to the beginning on the NQ. That. Okay, so here we are at the very beginning. Now, we didn't do anything all through here, but our first trade here on the NQ, we picked up 30 ticks. Then our next trade, we picked up another 30 to get us to 60. Then we picked up 1 to get us to 61. And another 30 here to get us to 91. Then we stopped out down to 71. Then we didn't do anything for a little while. Had some really nice looking trades in there, but we didn't do anything for a little while until we got here. Picked up another 30 to get us to 101. Then another 30 to get us to 131. Then 6 to get us 137. And then didn't do anything for a little while, but there are a lot of nice trades all through here. Then here we went from 137 to 149, so we had 12. Then we went from 149 to a whopper. This one, 150. And then we stopped out. So we had 1 tick on this, and then we stopped out on this one, and that put us down to 130. And that's where we ended the trading for the morning. During the break, a couple of decent trades in here. Now again, if you get a trade like this and you don't put in a higher swing, you're not going to take anything after it. Okay. And all of these shallow pullbacks, I wouldn't have done anything with. This one here, I would have taken. This one, I would have taken. This one, I would have taken. This one, I would have taken. So on every one of those, just think 30 ticks. $900, $900, $900, $900. With 6 contracts on. You get into here, we just got sideways. This right here would have been a break-even trade for me if I'd have taken it. And the long-term direction was pretty flat through here. This was all during the break, so I don't know that I would have done any of that. And we just hit the 1 o'clock time, so we're gonna have to jump in there. I didn't check to see if anybody had any questions. Let me see. I don't see any questions in here. All right. So there were a few more in here during the break. We ended the morning session with plus 130 ticks on the NQ. This is how we ended. 130 on the NQ, 6 on the Russell, 16 on the gold, and 8 on the ES, plus 940 per contract this morning. If you have not taken the free trial and you want to, go ahead to mytradingiq.com, sign up for your free trading. Right here, 5 days of free training, 9:30 to 11:30 Eastern time. If you're going to do that, sign up for the trading platform too. Okay. So anybody who is in here, who is on the trial, or is thinking about taking the trial. When you do take the trial, go to trading platforms and sign up for, now give us the information for whatever trading platform you're using. Like everything I'm going to do right now is going to be here on TradingView. Okay, it's all going to be on TradingView. And unless I actually place a trade, but everything will be on TradingView. If I place a trade, it'll be on DT Pro. But here we go. Or StoneX. And StoneX is one of their brokers, their preferred brokers. So here we go. The live stream is starting right now. This is where we would go. Go to mytradingIQ.com, trading platforms, watch this video to sign up for TradingView. All right, to take the trial, if you go to mytradingIQ.com, right here is where you sign up for the trial. And then you get into it right here. Right, these are the charts. The only way to get access to these indicators is to sign up for the trial. Okay. Now let me move this up and over a little bit like that. Right, this thing behind it right here was from our training session this morning. Well, we're going through the lesson plan. But for right now, that's not the ES. It is the ES. The ES has got a short here. Now, we talked about this short a few minutes ago when I was saying it's pulling back up and it's about to give a shorting opportunity in here off the ribbon. So a green arrow off the ribbon is the highest probability trade. Now, this particular one had a gap from right here down to here. And so it's pulling back up right now. And it's still a viable short trade. Over here on the NQ, you see all this consolidation right here. Let me just make sure I'm pointing at all the right stuff for you guys. Yes, on the NQ, you can see the consolidation. I need to move this over just to here because I don't care what's on that side. There we go. Okay, so the ES is now moving down here. I'm going to bring it over. Here is the ES that I said was still a viable trade. And I'm going to bump my stop to +2 ticks. And now I'm going to bump my stop to +4 ticks. Actually, that's 5. I'm going to bump it to 4. Okay, it's gone down about as far as it's trying to get down here to prior swing low at 4,475. That's where it's trying to get down to right there. But I ended up with 4 ticks. Now keep this number in mind down here, this 4,475. Okay, the reason it's trying to get down there is because the markets are always doing the same thing. All right, they're always doing the same thing. And the sooner you understand that, the better off you can be. What our indicators tell you is where to get in on the pullback. What price action tells you is what to expect out of the trade. Okay, you expect it to continue the trend down. If it fails to continue the trend down, you don't take any more short trades. So we just took 4 ticks in profit on that with 6 contracts, right? So that was $300 that we just took right there. Let me erase all drawings. Go here. So now we wait, right? We came out of the consolidation that we were in here on the NQ. Made a quick leg down with no trade setup, making a quick leg up with no trade setup. So we still have no trade setup. So far the only trade we've had is this one here on the ES. Now, I did not check to see how many people are in here and watching right now in the live stream. But anybody that is watching in the live stream, if you have any questions, just type them into the box. If you have not taken a free trial with us, then go here to mytradingiq.com. Right here, sign up for your free trial, 9:30 to 11:30. Again, the only way to get access to the indicators is to sign up for the free trial. Jade, I see you in the other chat, and that's great that I see you over there. If you have any questions about anything, you can type them into that chat too. Okay, I'm monitoring both right now. And I'm pretty sure you came from trading. Anyway. So what we're waiting for now, we need to get a lower swing to continue the trend. If we did not continue the trend, we don't want to trade in the chop that happens after that. Right? You want to wait until you have an actual direction change from long-term direction. Okay, like this is a direction change right here. So we pull back down on the NQ, back down to the ribbon. And if you get an up close off the ribbon right here, that is going to be a green arrow. Probably if it comes, no, it's not going to be any kind of an arrow. Sorry, it's not going to be any kind of an arrow. It is a valid trade, but it's not any kind of an arrow. Okay, the reason it's a valid trade is because you had the test of the ribbon right here, and the long-term direction is bullish. So I was going to bring it over and show it to you. I actually put it on, and it went 8 ticks into profit. It bumped my stop to break even, and did all that stuff without you even seeing it. So I'm out of break even on that trade, actually +1 tick. But let me go here for a second. Go to trade rules. And the reason that was a trade, it was a long trade without the slingshot. These are the rules right here. All right. First, all trades must come after a higher swing, and they must be in long-term trend direction. Then the black line in the ribbon must be on the bottom and in the green, and price must touch the ribbon on the pullback. This is the black line on the bottom. This is the black line on the bottom and in the green. This is the higher swing. This is your long-term direction. So it touched the ribbon on the pullback. So this was your trade right here. Now, we did that, and once we got into the trade, right, there are three parts to every trade. There's the entry, the risk management, the exit. So we did the entry exactly right. Then the risk management, because this is a 7-tick range, actually, that is, let's go back to that for a second. That is a 16-tick range. All right, so the risk management is a little different on that one because it's a 16-tick range. The initial stop is 20 ticks, and it trails to break even after 8 ticks in profit. Now, I didn't get to show you any of this because it happened so fast, but it did. My initial stop was 20 ticks. It would have been down here, and it did go 8 ticks into profit, and it automatically bumped my stop 21 ticks, put it at plus 1 tick. And once it did that, the risk management part was done. All right, and then you get to the exit part. Look left for the prior swing high or low, your support resistance. So looking left was this level right here. All right, that's what it was trying to get up to, and it just completed that. So now you anticipate it's going to pull back down and do it all over again. Right. Now, one of the things that I want to, for any of you guys that are in here right now that are actual partners and members and you didn't make it to the morning session, you see how right here the ribbon has gotten up above the prior swing low right here? That's good. You want to see that because now if price pulls back out and hits the ribbon, it's going to be above the prior swing low. Because when price is moving up like this, and then down like this, and then up like this again. On the pullback, you don't want it to get below that level. You don't want to get to that level. You don't want to get below that level. To it is okay, but not below it. So if the ribbon is up here, then you have a good solid place for it to bounce off of without going too deep into the pullback. Okay, so that's good information right there. When it gets there, when the ribbon gets up above that prior swing low before you get your next setup, that's good stuff. You're usually in a nice strong trend when that happens. Okay, so that's what we're doing right now. Waiting for it to pull back and get us into the ribbon again. Okay, now it may or may not do it. I don't know. We're going to bring it over here. Now we're oversold, so we just got to go 17 ticks up from the bottom of the bar. Now we're going to have a green arrow if we get an up close. Right, if we get an up close and it pulls it out of the oversold, it's going to be at 95.25 right there. And there it is, and it should have actually triggered us in. Oh, sorry, I did the math wrong. Should have actually triggered us in, but I'm gonna go way down here right now and try to get in it anyway. Okay, now I'm just gonna cancel it. I missed the trade. I did the math wrong. It should have triggered us in, but it would have. But now it's no trade. Not anymore. It would have stopped you out if I'd actually gotten filled. That would have stopped me out. But you saw it did not actually fill me. Why was that not at 95? It's 94.50. Okay, I missed the low of the bar was off. I was off from the low of the bar and gone a little lower. All right, so this is a valid trade right here because I didn't get that last one. This is a valid trade. Here, I'm in this one. And you see it just ran up. And did you see it just automatically bumped my stop up to break even plus a tick? It hit 8 ticks and it automatically bumped it. Now that is a thing that I have configured in here. Right, my target is at 30. My stop is at 20. After it goes 8 ticks in profit, it bumps at 21 ticks. And that's what it just did automatically. Okay. I feel like I'm going really fast here. I'm just trying to go with the speed of the markets. If anybody wants to look at anything different, like equities or anything like that, do you want me to slow down? Just say so. Okay. I'm just running with the market right here. We had this nice trade here on the ES. It did not put in a lower swing, did not continue the trend. So now we have nothing there. Going sideways right here. We don't have anything there. Sideways here and sideways there. So it is now 1:10. We have 20 minutes left of the session right now. Okay. Jade. You had Ninja, didn't you? Somebody had Ninja. A lot of people have Ninja. All right. So the NQ long-term direction has gone flat, and it's flat everywhere else. All right, so nobody's asking to look at anything else, but I'll just go look at something else. Okay, since nobody's asking. Let's see. Questions? Anybody? Anybody questions about anything? All right. Well, since we don't have anything happening here, we'll start with the Russell. All right, let's go look at a stock. Look at Tesla. Okay, I have no idea what Tesla's doing today. We're not going to look at it on a 7-tick range, but we'll do it on a 50-tick range. All right, so every bar is 50 cents. Okay, so you can see right here that Tesla gave a short here, and it did put in a lower swing. So we gave another short right here, did not put in a lower swing. So it works the exact same way with equities. Okay, a short here, a short here, a short here. No lower swing, so no short in here. Okay. Over here, the long-term direction changed to bearish. This was actually a ribbon trade. You didn't need to have the arrow on this, so you could have gotten short right there. That went right through. It gave the long right through here. Now, your risk on a 50 tick, your risk could probably be about 75 ticks or 75 cents. All right, so this one would have stopped you out. Probably want to bump it to break even after you get 25 cents in profit. So we'd have to go up to from 57.71, 25 cents be 96 or so, right? Well, I guess it was enough. There was enough in there to get you stopped to break even. So that would have been a break even trade. And then without putting in the higher swing, you wouldn't have done that. Okay. And so then you come over here, you had 3 more trades. So that is just the last hour on Tesla. Okay. If you had 1 share of Tesla, and here you could have made a couple of bucks there. Then you would have stopped out 75 cents there. Not done anything there. You made a couple of bucks there, like $3 there. $3 there. $3 there. And $2 there. Okay, if you had 1 share. If you had 100, well, then multiply all that times 100. Okay, and it's not going near as fast as futures go. You'd be doing nothing right in here. Right. On the futures right now, we don't have anything. Markets are just flattened right out. But I just wanted to point that out. If anybody wants to see anything else, you know, that was Tesla. You can look at anything. You can look at Google. Now Google's about the same thing. So 50 cent, a 50 tick range bar is about right. So in here you would have this nice short here on Google from $119.38, drop down to 100, so it dropped $2 right there. Then you had a follow-up short right here that went from 1774 down to 1727. So you would have had at least a break even, maybe a little better. You wouldn't have done this because it didn't put in a lower swing, and right now it's starting to set up a possible long trade. Right? So where do you think the long trade is going to go? Well, if we get down here, now we're in the oversold right here. Okay, we're in the oversold, so all we need to get is a pull out of the oversold to get a black arrow. Right now, the long-term direction is bullish. You see, we haven't hit the ribbon yet, so you're not going to get a green arrow. But if you get a pull out of the oversold on an up close, you get a black arrow. And where do you expect it to go? Well, initially, you're going to expect it to go to right here, all right? And then the next level will be right up here. Okay. That's with Google. I did not. Why am I not seeing that? Okay. Oh, okay. I didn't see it over there. Oh, there it is over there. Okay, I'll look at that in just a minute, Jack. Okay, so on the ES, there's a question in here from Macon Mac. I'll just call it Mac. This is the ES right here, right? This doesn't have anything right now. It gave us that 1 short a few minutes ago right in here, but doesn't have anything right now. Okay, and Jack asked for PLTR. PLTR. Polanter. All right, this is $14. So I mean, you can do it on a 50 tick range, but you're not going to get too many of them. Okay, so if you drop that down to like a 25 range, so it's a quarter per bar, Jack, then you have a little more information in here. So if you have, like, let's say you have 1,000 of these, right? And now it drops down from here, a quarter a bar from 1464. Every quarter is 250 bucks. Okay, so there's 250, there's about 500, there's another 500. Then right here, you would have to have, with a quarter, you'd have to have probably 3750 stop. So you stop out a little bit right there, give a little bit back, not do that one because you can put in a lower swing, and now it's changed directions. Should be looking for it to pull back down into here. Okay. On which one? On the PLTR. Let's take a look. It was yeah, I had it on a 50. Yep, I had it on a 50 range. Yeah, 50 range right here. Yeah, 50 range is saying short right here. But it's coming after this one. Yes, coming out of the overbought right here. And this got a lot of potential for it to move down right here. Okay, so on the smaller time frame, it's saying don't do anything right now, but it's saying you have potential for a push up, but it's saying don't do anything yet. Okay, whereas on the larger time frame, it's saying it should get down to here to 1354. So there's a little bit of, well, we'll see what it does. You know, I don't know if it's going to stop when it goes down here. What the larger time frame is suggesting is that it's not going to stop. It's going to go right through all of this. Okay, the smaller time frame is suggesting it's going to buy. It's going to bounce. But if you look at this right here, Jack, you know, everything that I say in the morning, this is a 50% retracement of that leg down. Right. So if you go back here to this bigger time frame, we'll leave that right on there. And you see the same leg, the same retracement, the green arrow. You see where I'm going with that? Okay, ranges and stops. Well, with this on a 50 range, I'd have a 75-cent stop. Okay, and I'd be looking for down here. I'd be looking for that. And on the 25 range, I'd have probably like a 38-cent stop. Okay. Yeah, you can have a long time in between bars, you know, like quite a bit of time, could be hours between bars, but well, on the 50 range. Okay. Now, go back here to the, oops, hang on, there we go. I just locked myself out again, I did. Okay, so I'm going back here to look at the ES with you one more time. Okay, so this is the ES on a 7 range. And we had all these opportunities here, and we took this one since we started the meeting. We took this one right here, and we got a point out of that. Right now, we got a point with 6 contracts on. So with 6 contracts, that point's $300. I did have enough to take 2 points at one point, I think. But I was looking for, I was going to let it run and get down to here. This is what I was really looking for. Move down to here. Now, we did not continue the trend. Did not go down there and continue the trend. It just got sideways on us. So we really don't have anything in there. You can see we did have some nice trades here during the break there, and short trades in here. Okay. Yeah. All right. So we still don't have any more trades here, guys. But if you want to look at anything else, you know, this is, Jack wanted to look at this one. But if anybody wants to look at anything else, you know, I'm happy to look at anything. Look at SPY. I haven't looked at that in a while. Okay, and this, because of the price, you might want to do that on 100 range. All right, so each bar is $1. Okay, each bar is $1. So you see in here, it gave, this one gave a lower swing, so that was okay. You take, this one was just a ribbon trade, which didn't put in the lower swings. You would have skipped all that to get over here. Could have taken that, it did put in the lower swings, so you could have taken this. Now with the $1, you're gonna move your stop to break even probably after it hits a quarter or so. But your stop with $1 is gonna be $1.50 probably. maybe $1.25. So we had 32, 34, and it dropped down to 31, 31.80, 31.90. So you did have enough in there to get the stop to break even on this. And now it's changed directions, and you're at the ribbon right now. This is with a $1 per bar. Now, what I was saying earlier, and I even said this yesterday, when you jump around with time frames like this, one of the things you have to, did I take any trades today? Yeah, I took 18 trades today, not counting the one that I took in here. I'll show you that in just a minute. Okay, Mac, just hold on. I'll show you that in a minute. So right in here, what I was going to say is when you jump around with different time frames like this, you should really take a look at the no trade zone. Oops, no trade zone. See what you've actually covered with the no trade zone. Because remember, you don't want to have arrows where price is flat like this right here. You don't want to have arrows where price is flat. So the no trade zone that we have set for this on the SPY is pretty good. I don't know why we have no trade zone right here. I gotta look at that because I know what it's looking at. It's looking at the difference in between these lines. But if you have completely parallel lines, whether they're going up or down, it's looking at that difference. But anyway, you see in here where it's flat, that's where you don't want to trade. When it's flat, the long-term direction, you don't want to trade. But let's go back. Mac, you asked if I took any trades today. Well, I'll go back and look at the trades that we took on the NQ. Right, the other markets we didn't take that many trades in, but I'll look at the NQ for you. Okay. And we'll go over the trades that we actually did take. Now, I only have 8 minutes left, but we don't have any trades really setting up. The NQ actually might have a trade setting up right now. I'm going to scroll back and I'll see if I can do this quickly. I know I can't even scroll back quickly. Well, you know what? I can just tell you what we did with the NQ. This was a stop out right here. This was plus 30. But you know what? I don't have time to do that because I think we're going to get another trade in here in just a minute. So what we did on the NQ today, our first trade was plus 30. Our second trade was plus 30. We're at 60. The next trade was plus 1, so we're at 61. The next trade was plus 30, so we're at 91. The next trade was minus 20. We're at 71. The next trade was plus 30. We're at 101. The next trade was plus 20. We're at 30. We're at 131. The next trade was plus 6, we're at 137. The next trade was plus 12, we're at 149. The next trade was plus 1, we're at 150. And then the last trade that we did in the morning session was minus 20. It was down to 130. That's what we did this morning with the NQ. Okay. Now in here, we had this nice green arrow right here suggesting a long trade, and now we needed to pull back. The long-term direction has changed to bullish. We just needed to pull back. Okay. Over here on the gold, the long-term direction started to change a little bit right here. We're oversold. We're oversold. If we get an up close on this bar, it might give us a green arrow on the gold right here. And so far on the gold today, we only had a couple of trades, one for plus 4 and one for plus 12. Okay. And that did give us the green arrow on the up close on the gold. So that is a trade. But Mac, if you were talking about trades in here, the only trade that we did in here was this one right here on the ES. Now we have a trade developing here on the gold and a trade developing here on the NQ. All right. Here's gold. It was a long trade from right there. Right, and here's the NQ. It was a long trade from right there. Okay, so that's what we've got going on right now. Now the NQ just went 8 ticks in profit, so it bumped my stop from minus 20 to plus 1. It bumped it 21 ticks. Now I have a 30 tick target here on the NQ right up here. Okay, all of that is automated. Once I put the trade on, the rest of it happens all by itself. Now I could lock in more profit right here, and if we get up to like right here, then I will. Right now, I'm just going to lock in a full point. Right, so I have 4 ticks in profit on this trade right now. So I'm going to get 4 ticks, or I'm going to get 30 ticks. Okay, and if I just let this thing play out, when you're looking at the chart, it should get up to right here. The prior swing highs, but it should get up to right up here. Minimize this here. It's just about up there now. 1925, and that's exactly where our 30 tick target is. All right, so I'm going to lock in 2 points, 3 points. So I got 12 ticks or 30 ticks, and 12 it is. So that might have been what you were talking about. You asked about when you asked if I took any trades today. Ooh, I don't know what I just did there. Okay, I ended. Is that what you meant, Mac? Mechanishipo. Mechanishipo. I don't know. I'll try it. All right. I'm sorry. The gold is still going too. I totally forgot about the gold trade. Here, I'm going to throw my stop at break even on the gold because it should have been a break even after we had 4 ticks in profit. So it just took me out of break even. All right. So there. Now you've had a successful trade here, profitable trade there, a profitable trade here, and a break even trade here so far in this session. Okay. We have 4 minutes left. Today on the ES, we only had 1 trade for +8. On the Russell during the room, we only had 2 trades for +6 total. And on gold, we only had 2 trades for +16 total. The NQ is where most of the trading was this morning. And most days it is. The NQ is the most volatile market. Most days. No, we just did not trade the NQ. Like 10 years, we didn't trade the NQ. Then once we came to TradingView and we simplified the analysis that is required for the trade entry, made it easier to get into and out of trades. That is when we started trading the NQ. And actually, if you look at this, these are our daily results, right? And the spreadsheet that has our daily results goes back over 10 years. It's 10 years of daily results. I can go back here and see where we were in 2017. April 19th, 2017, we're up $197. And April 28th, we're up $238.75. That's in April. Let's see in June in 2017. June 28th, 2017, we're up $222.50. But anyway, the reason I was showing you this is because if you look at the totals down at the bottom right here, totals down at the bottom. The NQ right now, so far this month, we're up $6,100 in the NQ, 1,200 in the Russell, 1,100 in gold, and nothing on that one. That's the crude oil, and 587 on the ES. So from month to month, you can look at that and see how we've done over the years and over time. Now the gold went up to the prior swing high, but it didn't go through it. The NQ did go through it as we were expecting. The ES is starting to go and it's starting to change direction here. And we only have about 1.5 minutes left. A minute. So again, if anybody's got any questions, I'm happy to jump into any other market right now and look at anything you want to look at. This was the Russell. So I'll go back to RTY on that. And the U contract, put it back on the 7 range. It's kind of interesting on the 50 range. We had some great trade triggers here on the 50 range. That's a pretty big stop. Go back here to 7 range that we like to trade in because we get plenty of opportunities in our 2-hour window in the morning. There you have it. All right, so again, if you've not taken a free trial with us, you just have to go to mytradingiq.com. How did I change the range? What do you mean, Michael? When I changed it to 50? How did I add these up here? Is that what you mean? Okay, if you click on this little down arrow right here, go down to the very bottom. Down here, you can add whatever you want. Like let's say I want a 4,500 range. Click that, choose range, and hit add. It doesn't have one here right now. If I hit add, it does. And if I want to show up here, I just have to put a star on it, and it'll show up there. See? But I don't want that. And I don't really want that, or that, or that. So now I have just what I normally use up here. Okay. All right. Well, it is time, guys. It is 1:30, so I'm afraid I'm going to turn into a pumpkin here if I don't end this pretty soon. So today we had some decent trades in here. They were just setting up today. You know, if they don't set up, we don't get to take them. But we were able to look at some equities and even SPFs. So Jack, what was that thing? PLTR? PLNTR? PLTR. Let's look at that one more time. PLTR. And we'll see what that ended up doing. We were looking at that on a 50 range. Okay, 50 range still sitting there, and we also looked at it on the 25 range. 25 range, still nothing there either. Okay, but if you bump that down to a smaller time frame, it's suggesting it's going to go down from right here on a smaller time frame. Anyway, that's it for now, guys. I'm going to wrap it up. Again, if you haven't taken a free trial, go to mytradingiq.com, sign up for the free trial. If you are not following us yet, click the follow button to be notified when we do live events like this. We try to do one of these every day at 1 o'clock, but every now and then we're going to do one at like 9:30 in the morning, and we'll let you come into our room in the morning and watch live in there for 45 minutes or so. All right, that's it. Wrapping up the live stream. Thanks for coming today. You made some money. It was some decent opportunity to do that. Okay, that stream is done, and now I can pass it back out to Fabulous Phoenix, Arizona. It's Studio A overlooking South Mountain, America's largest city park, and there it is. We're in Studio A.
All righty. Recap of the morning session.
Today it took 7 minutes and 2 trades to get to $1,140.
That'll put a little pep in your step.
Yes, that makes for a nice start of the day.
Okay. Well, good job. And guys, let's pick up where we left off. All right, we're looking at the Logic 247. We're in week 256, and we've issued over 14,500 individual handcrafted alerts over that 256-week period. The Globex markets open Sunday night at 6 p.m. Eastern, and they stay open until Friday afternoon at 5 p.m. Eastern. There is a 1-hour break every day. So like right now, we all know it's the Wednesday session. Stocks will stop at 4 p.m. Eastern, but futures will continue trading until 5 p.m. Eastern. And the markets will go quiet for 1 hour. And then tonight at 6 p.m. Eastern, the markets start up again, and that is the beginning of the Thursday session, even though it's still Wednesday night here in the U.S. So, since the markets open Sunday night at 6 p.m. Eastern, we've issued a total of 41 alerts, 4 never triggered. We're still waiting on the outcome of 5. That gave us 32 actionable alerts, of which 19%, 6 or 19%, would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a simple process that I teach all of our lifetime members. Now the caveat here, you never risk more on a trade than the potential profit in the trade. Some of the alerts may have $1,000 of potential profit, $2,000 of potential profit. The maximum you want to risk is $300 per contract per trade. Now, on an alert that offers however much profit, and you know how much profit the alert offers by just looking at the entry price and the final trade to price. The difference between the two is the potential profit. So even if a trade has $2,000 of potential profit, the maximum you would want to risk is $300 less when possible. Also, if there's an alert that only has $200 of potential profit, those are kind of rare, but every now and then they come along. sometimes, and it's really rare, there might be an alert that only has $100 of potential profit per contract. You don't want to risk more than the potential profit. Now let's go back to the big alert that maybe has $2,000 of potential profit. But you know that according to your business plan and your trading plan that we've helped you create, you're going to get out at the initial target. No matter what happens, you're getting out at the initial target. Then your risk should be commensurate with your target. If your plan is to stick around for the second target or the third target or the fourth target, again, don't risk more than the potential profit and don't risk more than $300 per contract trade. So what started out as a rough week has become a much better week. And we still have the rest of the day. So that's Logic 247, Globe. Their day session is our night session and vice versa. So we make sure everybody gets taken care of. Our original alert service, concierge trade alerts, they're a little bit different in a couple ways. Number one, they don't come out around the clock. They are published shortly after the Globex open each evening. As I just explained, the Thursday session will start tonight at 6 p.m. Eastern, just as the Wednesday session started last night at 6 p.m. Eastern. So last night at 6:15 p.m. Eastern, all of our members and all of our trial members received all of this. Okay. Now, because this broadcast is open to the public, we've got people in the audience or people watching this after the fact who did not get these numbers last night. So take a screenshot, because we're going to quickly walk through each individual market. Okay. Now, once this report is published, what do you do with it? First thing you do, and we'll just use the ES as an example, go to your 30-minute chart, make note of where price is at the time the report is published. It's always going to be between these two numbers. Draw a line in the sand at the long target, draw a line in the sand at the short target. If price gets above the 30-minute BBC, it's attempting to reach the long target. Now, we already went over the daily chart, and you saw that green line. Okay, you're going to see the same set of indicators on my 30-minute chart, because our indicators and strategy is fluid across all markets and all time frames, because price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. So if price gets above the 30-minute BBC, then it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. It's that simple. You still have to look left to spot potential obstacles, like previous swing highs or swing lows, which can become current resistance or support. Also, you have to learn how price behaves at a weekly trading zone, because price is always trying to get to a weekly zone. When price gets to a zone, 70% of the time it will consolidate, 20% of the time it will get rejected, and 10% of the time price will slice through it like it's not even there. And then when that move runs out of steam, it will typically retrace back to the zone it sliced through and then continue in the direction of the slice. We've published the zones for our members every Monday. since December 14th of 2009. So we have well over a decade of how price behaves at a weekly zone. Once you grasp how price behaves, how price is drawn to the zones, okay, they will become one of the most important tools in your trading toolbox. And as a lifetime member, even after you've learned the strategy, how to read the indicators, you don't maybe even need the live training room anymore. Some people just like to have a place to hang out, because trading can be a lonely business. But you reach a point where you just want to grab your goal for the day and go do life. Well, on Monday mornings at 6:15 a.m. Eastern, you pop into the Telegram channel that you have access to as a lifetime member, grab the zones, put them on your 30-minute charts. You're good to go for the week. Once the zones are published Monday morning at 6:15 a.m. Eastern, they don't change. They are carved in stone the entire week. Now, I realized, thanks to one of our members, thank you, Neil, I should have rolled soybeans forward Sunday night before I put out the zones. He and I came to that realization about the same time last night. And so the correct contract now is ZSX23. That's where the most volume is. So I did send out an additional set of zones for the X contract. But otherwise, once the zones are published, carved in stone for the entire week. Don't change them, massage them, or manipulate them in any way whatsoever. Now, this all sounds real simple, and it is, as long as you're able to resist the urge to make it more complicated. I mean things like, adding in other indicators or other oscillators. See, new traders get it in their head, like I had it in my head, that there's that one thing out there, that one indicator, that one oscillator, that one filter, that something that will prevent me from ever having to know the agony being stopped out. Well, I learned that was a fool's journey. By the grace of God, I realized that, Michael and I realized together, that more was not better. In fact, more was the problem. So we had so many indicators, so many oscillators. We were rolling our own. We wiped the slate. And so the very simple set of indicators that you now see on my chart are the result of that journey that he and I went through together. And what you see on my chart is all you need. If you add anything or take anything away, then you're not using our strategy. If you want to be a consistent trader, and all that stuff that has cost you years of your life and tens or hundreds of thousands of dollars, okay, I'm sorry, but you're going to have to put that away. Because if you try to mix and mingle, you're going to continue to do what you've done in the past. Get frustrated, get aggravated, throw things, and blow up accounts. So the choice, of course, is yours, because it's your trading business. And we're not just teaching you how to trade, which is a very valuable life skill, but we're teaching you how to operate a trading business. All of our members receive what's called the 24/20 blueprint. It does a lot of things, but one of the things it does is it helps you write your business plan and your trading plan. every business, I don't care what kind of business it is, needs a business plan and an operations plan. So in the world of trading, you have a business plan and a trading plan. 9 out of 10 new traders fail. Number one, because they don't have a teacher. So we fix that 2 hours a day, plus the unlimited one-on-one mentoring. But you also now have a business plan and a trading plan to follow. And if you have the discipline to follow those rules, your chance for success is greatly enhanced. So everybody's had a chance to grab a screenshot. However, before I can bring up the charts again, I must reveal our tweet of the day. And I made a decision to give equal time to both sides of the aisle. As you remember, yesterday's tweet of the day came from the left side of the aisle at Occupy Democrats. Okay. Today, the winner of the day, again, is Moms for Liberty. This is a powerful, powerful group. Started by 2 moms. They've got 285 chapters in 45 states with 120,000 members and growing. We are fighting for the survival of America, uniting and empowering parents. Join us. I encourage you to follow these fine ladies. They're doing a great job. Here, the tweet today was pretty simple. Why should parents be concerned about the rise of communism in America? If you go to this tweet, then watch this video. Did you miss last week's Joyful Warriors podcast? See, if you just go on Twitter and put in this hashtag Joyful Warriors, or go to the Moms for Liberty channel. It's Moms, the number 4, Liberty. Moms for Liberty, right? Then you'll find this podcast. Kenneth Pope, CEO of the Victims of Communism Memorial Foundation, shared his perspective on why parents should be concerned about communism and how it's a threat to liberty. So, it is a very good job. He's telling you, oh, we're going to give everything. Free food. This socialist or utopia, communist utopia, it doesn't work. Capitalism works. I encourage you to visit Moms for Liberty, follow them on Twitter, and make sure you understand the harsh reality of communism. Basically, all you got to do is talk to someone who's lived in a communist society, and you'll quickly understand. So one last quick look at the daily chart. We've gone over it in detail, so if you join today's broadcast live, later you can go to youtube.com/CFRN and see the whole broadcast in its entirety. You can fast forward up to the part where I dissect the daily chart and explain how it's done everything we expected it to do after this day right here. Boom. Boom. And you see the high of the day is just shy of red and falling. Support of the day is at the step line. Window of opportunity. The price trades below the low of the day. and you should expect it to drop. May not happen all this afternoon. In fact, buyers could come in and send this thing higher. That's not the high probability thing, but you have to embrace all possibilities. And then where should you expect support? At the 38% fib extension and the daily BBC. That's support times 2. Talking about an area that's roughly 43.93 down to 43.73. It's about 20 points in there. At $50 a point, that's $1,000 per contract traded. So make sure before you get in, you let the low of the day get taken out. Unless you're on the 30-minute chart and you're trading to the low of the day. Okay, where's the low of the day? Right there. Where's price headed? You got potential support right here. $44.04 to $44.02. What was this low? Yeah, $44.04 to $44.02. There's your goal for the day. If price trades through that window. Now, the vertical line that you see separates today, Wednesday, from yesterday, Tuesday. Back here is Monday. Okay. When price drops to a weekly zone, we expect support. Support. When price rises to a weekly zone, we expect a resistance. These are 30-minute candles, so you don't see the little dogfight that took place here or here. But as you can clearly see here, resistance, 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 resistance. And this is consolidation. 70% of the time, when price hits a zone, it will consolidate. 20% of the time, it'll get rejected. 10% of the time, it will slice through the zone like it's not even there. That would be like this candle. This red candle came all the way down here, right? Sliced through that zone like it wasn't even there. But when it ran out of steam, what happened? It retraced back up to the zone it sliced through, and now is continuing in the direction of the slice. Over and over, again and again. These are windows of opportunity I drew in yesterday, as I just drew in this one here. As we can see, that filled, that filled. Last night, here's where the market opened. Remember, the vertical line separates today from yesterday. Today began last night at 6 p.m. Eastern. When the market opened, we were right at a weekly zone. We had red and falling overhead, which represents resistance, and the BBC below us, which represents support. The pullback to the BBC holds more often than not. Whether it pulls from below or whether it pulls from above, it holds more often than not. Okay. Now we know eventually price will trade through the BBC. That's what keeps the markets fluid and tradable. So we consolidated. This is all consolidation here, right at a zone. We keep banging our head up against the ceiling. Boom, 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 boom. Now the zone below is 43.98/99. The low of that candle was 99 and a tick. 43.99.25. Now today's Wednesday. These zones went out to our members and trial members Monday morning at 6:15 a.m. Eastern. Having that kind of information is pretty valuable. I mean, as long as we had this obstacle overhead, the weekly zone, we couldn't think about going long. We had to overcome the zone, and then actually this was a slice. Go back to the zone it sliced through, found support at the BBC, and then off we go, right up to the long target. Okay, this candle right here, it opened at 16.25, and it ran up to 18.75. That's not right. Ran up to 23. It opened at 16.25 and ran to 23. That's almost 7 points. And we'll call it 6 points, just to be conservative. At $50 a point, that's $300 per contract traded. Once you've earned the right to trade 10 contracts, then that's a $3,000 handle. However, when you become a lifetime member, you don't start trading real money right away. That would be foolish. You haven't had time to learn the strategy or how to read price or how to read the indicators or how to use the zones. So that blueprint I spoke about is going to put you through 10 days in your demo account. You need 10 consecutive days in a row in your demo account before you even think about going live. Once you put together those 10 days, the blueprint will give you the green light to go live with one contract. Now that you're trading real money, your goal is to increase your account balance by $2,000. Once you've accomplished that, the blueprint will give you the green light to add a second contract. Now, the second contract is much different than the first one. Different how? The first contract is funded with your startup capital, whatever money you use to open your account with. Second contract is funded with profit you earned in the market. Blueprint will tell you when it's time to add number 3, number 4, number 5, number 10, all the way up to number 20. Okay? But you're only adding one at a time when it's time, and you only add with profit you earned in the market. If you have the discipline to follow that formula, then your chance for success is greatly enhanced. And the danger of blowing up another account is greatly reduced. So, yes, we hit the long target. Have we hit the short target? Not yet. Nor would we expect to, because we have an obstacle in our path. Okay? When price drops to a zone, what do we expect? Support. Support. This came within one tick of the zone. The zone is 98/99, and this swing low was 99.25. One tick from touching the zone, based on numbers that were issued Monday morning at 6:15 a.m. Eastern. Now notice up here, okay, we've once again found resistance at the zone. Blue and climbing is now turning to red and falling. Blue and climbing is bullish. This is what I refer to as the perfect stack. You have price, step line, blue and climbing, the BBC. When you have that in place, you should expect higher prices until step line crosses from the left side of blue and climbing to the right side. That tells you that this move has run out of steam and that price will most likely pull back to the BBC. Price always reverts to the mean. In our case, the mean just happens to be green. We call it the BBC. Stands for bull, bear, cross. Prices below it, we anticipate lower prices or we're bearish. And prices above it, we anticipate higher prices or we're bullish. So, sure enough, step line crosses, price headed right to the tick, to the BBC. And then it hits the zone of the tick. Then it pulls back to the BBC. From support to resistance to support to resistance to support to resistance. Are you noticing the recurring theme there? Okay. So, keep an eye here. If price can somehow get above red and falling, which you got to embrace all possibilities, it doesn't appear to be the high probability thing, but it's certainly possible. The high probability thing is for a price drop. Back this new candle we got going. If we take out that low, something like 4407 down to 44. Yeah, that's 4406. That means you'd have to get in at 4408. What's the low of this candle? 44.8 1/4. That one's a little tight. Probably wait for this one. Okay. But if this one fills and price continues, then there's every good reason that this one will fill. And then price may continue heading down to this low, to the zone, 98/99. We can't even think about the short target until price gets below this zone. This zone is an obstacle. Just like this zone was an obstacle to price going higher until it finally broke through. Coming down, we've already seen the zone acting as support. The Dow. We opened right at a zone. We consolidated. Remember, 70% of the time, you're going to get consolidation at the zone. This little candle here opened at 185. I ran up to 215. That's 30 points. You only need 20 points in the Dow to get your goal for the day. However, we wouldn't expect to hit this target until this high is taken out. So we're talking an entry around 34,240, and you got 40 points up to the target. Since price couldn't take out that high, and we got back below the BBC and below the zone, and we got red and falling, there's that perfect stack in reverse. Perfect stack up, perfect stack down. Price, step line, red and falling. This candle opened at 34,135, and it dropped 105 points. That's $500 per contract traded. Then we hit the zone, which we expect to be support, and it was. When the market finds support, it will go look for resistance, which it found. Once the market finds resistance, it's going to go look for support, which it found. Now what's it doing? It's looking for resistance. If the step line becomes resistance, then that shows that there's weakness in the market and that we should look for a break of these lows, okay? And then we could comfortably trade down to this area. So there's a big window of opportunity down here if, in fact, we got to take these lows out. Okay. So that covers. We hit the target, pull back to the BBC, hit the target again. Now, these are big moves. You only need 20 points to reach your goal for the day. The Dow pays $5 a point, the S&P pays 50 a point. So 2 points in the S&P gives you your goal for the day. 20 points in the Dow gives you your goal for the day. The Russell also pays $50 a point. So here's where the market opened last night. Price is trapped. Resistance overhead, support below. Broke out, and this little candle here opened at 63. It only made it up to 64.70. So not quite 2 points. Okay. And we pulled back and found support here. There's a goal for the day, and there's a goal for the day. And then this has got to be the opening candle. I don't do anything from 9:30 to 10. I don't put out alerts. I don't trade. There's a lot of pent-up volatility when Wall Street opens. Now, Michael navigates it well. Valerie navigates it well. My personal preference is to simply wait. Let the volatility play out. Let whatever news events play out. Often there is economic reports that come out at 10 a.m. Eastern. Whether you believe them or not, you never know how the market is going to react to the news. Is it already baked in the cake or not, or whatever? Patience is a virtue, especially in trading. So we came down and hit the zone. We spiked it, but ultimately it was support. Resistance, support. Same thing over and over. So now what's price trying to do in the Russell? We can take out the high of the previous candle, and it will most likely trade up to the high of this candle. There's 2 points available in there, 1872, 1874. Nah, not quite. So would I be interested in trading that? Personally, no. I want to wait for a high probability, low risk opportunity. What's the high of this candle? 75.90. So would I trade 77 to 79 to get my goal for the day if I didn't have it? Absolutely. This got a potential obstacle here, potential obstacle here. So I want to see price get above those obstacles. I want clear sky up to my target. So yes, we hit the long target, and we had multiple opportunities along the way to get our goal for the day on the way to the target. And because we didn't close below this zone, we spiked it. We didn't close below it. We had closed below it. Well, then we would have started entertaining thoughts about trading down to the short target. So far, there's been no reason whatsoever to even think about the short target. It'll be interesting to see, of course, where price finds resistance. It's all quite fascinating. But don't sit in front of the screens too long. If you're new to trading, you're going to have to show up and do the work and have some screen time so that you understand how everything works, how everything flows. But once you've learned that, additional screen time is not only unnecessary, it can be harmful. I won't go into the reasons why right now. If you become a member in one of our unlimited one-on-one mentoring sessions, I'll explain to you exactly why. So the market opened here, dropped to support, even dropped below support, okay? So we had a little red candle here. We closed below the BBC. We got below these swing lows. If you sold the open of this candle at 34, it dropped a whopping 2 3/4 points. So is it possible you got stopped out on this? Well, if you shorted the open of this candle, then yes, you did get stopped out. Price gets above the BBC, runs up to the zone. The open of this candle, 15.063, up to 88. That's almost, well, we'll call it $500 per contract traded. And we pull back to the BBC, price always reverts to the mean, okay? But here we did not pull away. See, the only reason I brought this to your attention is because we had actually pulled away from the BBC, but right here, price is still touching BBC. Quick, right? You got to wait for price to pull away, right? Or make it obvious what it's trying to do. When price took out this high, that told you price was going to try to get to this high, which happens to be where the target is. And then once price traded through the target, remember price is always trying to get to a zone. From the moment the markets open Sunday night till they close Friday afternoon, price is above the 30-minute BBC. It's trying to get to the zone overhead. A leg, retracement, a leg all the way back up to the zone, a retracement, and then support at the zone and the BBC. Now, blue and climbing has gotten directly above price, so that's potential resistance now. Over here, when you have the perfect stack, that's one thing. But you see, the step line has crossed from the left side to the right side. What happened? Boom. Price pulled back to the BBC. When blue and climbing is directly above price, it's potential resistance. Because as you can see over here, that's what it looks like when blue and climbing turns to red and falling. This is bullish. This is bearish. Okay. We don't teach you how to trade a specific market. We teach you how to trade any market. We literally teach you how to trade. And once you learn that, nobody can ever take it away from you. Now, we know that trading presents the opportunity to make an above average income, but it also presents the opportunity for a far more valuable resource, time. Money's a renewable resource. Time is finite. So trading not only offers you the opportunity to earn more if you have someone to teach you how, but it also gives you the opportunity to pursue the very thing God created you for. An opportunity to pursue your passions, spend time with your family, do humanitarian deeds in Jesus' name. Follow me? A lot of people don't ever think about that benefit. But again, it's more valuable than the money. Having both, well, that's pretty sweet. And we're the first generation in the history of mankind given this kind of opportunity. Paul, who wrote a good portion of the New Testament, he had to work a job. He made tents. I've never made a tent. Slept in a few, but I've never made one. And I got to assume it was, pretty tough job given the rudimentary equipment they had to work with. But he wasn't above working. Now, if churches wanted to donate money to help him in his ministry, he would gladly accept that. However, he didn't expect to live off of that. He made tons. What did the disciples do? You got to remember, Paul, he became a disciple of Jesus Christ, but he wasn't one of the original 12 apostles. Okay? How'd they earn their living? The original, the OGs, they were fishermen. When you live next to the Sea of Galilee, it's kind of a no-brainer. You fish. All right, let's get this done. Covered all the indices. Here's crude. We opened, we hit the zone, we dropped to the target, rallied back up, hit the target, rallied up again, overcame the obstacle, bang, hit the target, but we may have hit the high of the day. See how the step line is, if we go sideways, one more candle, gone sideways now, 1, 2, 3 30-minute candles, one more 30-minute candle sideways, and the step line is going to cross blue and climbing. What does that mean? Well, it means that most likely price is going to retrace back to the BBC. Price always reverts to the mean, and the pullback holds more often than not. So we hit our short target twice, hit our long target once. And again, our members and trial members had all these numbers last night at 6:15 p.m. Eastern. Market open. Remember, the pullback holds more often than not. Down we go to the target. Perfect stack. Price. Step line, red and falling. Boom. Where we find support? At the zone. Where do we consolidate? At the zone. Did we trade a little bit below the zone? Yeah, we did. And then what do? We pop back above it. Now, we're above the BBC. We've got blue and climbing. If we can take out these highs, we should trade up to this high. And if we can take out this high, we should trade up to this high. And if we take out that high, we should trade up to the zone. If we can overcome the zone, then we might hit the long target. Silver. Open, went sideways, pulled up to the zone, which served as resistance. When the market finds resistance, it's going to go look for support. And where to find it? At the zone. We consolidate, we pull back up to resistance and drop to support. We rally up to resistance and we drop to support. Rally up to resistance and we drop to support. And then we trade through the BBC. Pullback held, and the pullback held, and the pullback held, and the pullback held, and then we know eventually it won't hold. Remember, that keeps the markets flexible, fluid, and tradable. See this bearish cross that led to an extended move? First time price revisits that area, it will almost always be resistance. Same is true of a bullish cross that leads to an extended move. So we've now pulled back to the BBC. Question is, can we take out this high? If so, 22.93 to 22.96, that would be 3 pennies. 2 pennies is $100, so that'd be $150 per contract move. Euro. We opened above the zone, but we had red and falling overhead. That's bearish. Once price got below the zone and the BBC, we had a short-lived move, and we pulled back up to resistance. And you see, red and falling had gotten directly below price, representing support. So with only that much room to work with between resistance and support, we'll leave it alone. Okay? Tradable move. Look at how many times we hit the zone. Resistance, 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 resistance. These zones were given out Monday morning at 6:15 a.m. Eastern. And finally, we dropped to the target, pull back to the BBC, drop to the target again, drop to the zone where the market finds support. Now we're pulling up to the BBC. We expect the pull up to hold. See, the pullback held and the pullback held and the pullback held till it didn't. Pullback held. Will this pullback hold? There's only one way to find out. Wait and see. How will you know it held? Because you'll start printing red candles. How will you know it didn't hold? Price will trade through it and start printing green candles. Continue printing green candles. I know that sounds incredibly simplistic, but I assure you we worked very hard for many years to go from the complicated way of trading that we used to embrace to this very simple. Not easy, trading's not easy, but it can be simple if you will let it be. On the daily, we still got the doji. We still haven't overcome red and falling, and we haven't traded below the low of the session. So this window of opportunity will remain valid until it's either filled or the BBC moves up through it. Okay, so we'll take a look at it tomorrow. To become a lifetime member with no recurring fees, no upsells, and no nonsense, go to eminifuturestrading.com. If you have questions, call Valerie at 949-42-EMINI or email support@cfrn.net. 9 out of 10 new traders will fail. That's per Futures Magazine. Why? Because they don't have someone to teach them how to do the job. If you have someone to teach you how to do the job, you could become the 1 out of 10 that actually succeeds. But without a teacher, forget about it. Not only is there 2 hours of live training every day, unlimited one-on-one private mentoring, a strategy and indicator set that's fluid across all markets and all time frames, the Logic 247 alerts, the concierge trade alerts, the members only workshop on Thursday night, everything a trader needs, all under one roof, one low price. And that puts the ball squarely in your court. So, let's wrap it up with our good word for the day. Your position and your condition. Romans 5:9. Having now been justified by his blood. The Bible says, but God demonstrates his own love toward us and that while we were still sinners, Christ died for us. Much more then, having now been justified by his blood, we shall be saved from the wrath of God through him. And not only this, but we also celebrate in God through our Lord Jesus Christ, through whom we have now received the reconciliation. That's Romans 5, 8, 9, 11. Now, you could walk into some churches today and people might look at you kind of funny. Maybe because of what you're wearing. Oh, you don't have on a suit. Oh, you smell like cigarettes. That booze on your breath. There's a lot of religiosity out there. I would dare say that religion has killed more people in the name of God than anything else. See, here's what they don't tell you. God loves and accepts you just as you are. And it gets better. He sees you as blameless. How? 2 Corinthians 5:21 explains it. God made him who had no sin, Jesus, to be sin for us, so that in him we might become the righteousness of God. Note the words, in him. Imagine yourself placing a letter in an envelope and sealing it. No longer can you see the letter or read its contents because it's in the envelope. Get the idea? Always remember there is a difference between your position and your condition. When you put your trust in Christ, you're positioned before God as being righteous. You say, but what about my condition? I still fail. The job of the indwelling Holy Spirit is to bring your condition up to the level of your position. 2 Corinthians 3:18. And the Lord, who is the Spirit, makes us more and more like him as we are changed into his glorious image. So, how does the Holy Spirit do that? He draws you back to the place of repentance where you were cleansed. Notice, your position in Christ doesn't change, but your condition is constantly changing as you become more like Christ. And that, my friends, is our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.